All right, welcome back for another episode of Carnivore Trades. Today is Wednesday, December 21st, 2022. If you're not done so already, give it a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, into the markets today. So Spider's having a little bit of a bounce rally here, up 1.4%. Triple Q's up just the same there, and the Dow basically up just a little bit more, up just under 1.5 there on the day. Important level I'm watching here into the close. The SPY, I'm not really going off that right now. The dividend has kind of thrown things off. But the SPX here, it does look like we're going to close just shy of that 50 moving average. There's 5 minutes left in the close, so I will take you into the close today. We're right there. I mean, there's nothing to say they can't bounce us up in the next 10 minutes, or 5 minutes rather. But, you know, man, they're making it close, right? They're cutting it pretty close here. Can never make it easy, right? So there's the SPX there. The ES, for what it's worth, is above the 50 moving average, well above the 50 moving average right now. But on the actual cash S&P, that is not the case currently, barring a little run here in the last 10 minutes. You're seeing IWM getting a little bit of bid, so maybe they get us up there. We're only a couple points away. So the reason I'm even bringing that up, you know, this 50 moving average is not major resistance or, you know, support at this point. We've traded through it so much lately. But it's an important psychological level, and kind of like to echo what I said yesterday, if we flip back over to the spiders, I would have felt a lot better about a bottom if we had just gapped down. And I mean, we kind of gapped down a little bit yesterday, but not like nothing to, you know, really, nothing that says like flush out, panic selling, that type of thing. And we didn't really do that. And now today, you can see we're kind of vulnerable a little bit here. You see the Russell lost that bullish structure around 2 o'clock in the afternoon, and we're basically just clawing back, basically just to try and close on or above that 50 moving average there. Apple's holding up pretty decently. Apple did come into some resistance though. If we look here, that trend line that I showed you guys in the video over the weekend, we got to go back a little bit farther here. But yeah, so all the way back to 2020. We broke that trend line, and now we're back testing it. It is backing off of it a little bit. I think Apple can get up to 140, though, should the market cooperate. But point is, again, like I said yesterday, I would feel a lot better about calling a bottom if we had just gapped down and had a significant, maybe a sell-off for the first 30 minutes, or even today, if we gapped down today and had a sell-off for the first 30 minutes and we V-shaped. We gapped up today. We did have an opening range break, and then we just consolidated. So it's not, and there's a lot of things today that are not really participating that much in the rally. You see Tesla is down again, although I think Tesla's absolutely juiced here for a major ripper. And full disclosure, I do own some Tesla right now. But if we take a look at the transports here, this is a bit of a red flag. We mentioned this yesterday. Transports were down pretty sizably yesterday in an up market. And today you can see they never even made a higher high. So we gapped up, put in a little shooting star, backed off for the first 30 minutes. Then we rallied back up, and we never took out this high. We just went to double top. And now we're just kind of hanging in there, just kind of chopping sideways. So that's a concern. The transports, though, they can be diverged from the spiders and from the Dow for, you know, usually it's about like a week or two of, lag. So the transports tend to lead by a week or so. So that doesn't mean the spiders are going to crash tomorrow or anything like that. But it is something we got to note and you know, put on the radar there. Spiders trying to hang in there currently. Again, we'll check back in on the close. Let's look at the triple Qs here. Again, getting a kind of a dead cat bounce. The Qs actually, not a terrible bounce. Again, they defended that 270 gap there, at least not the full gap, but the window there. And it's getting a bounce. It's basically closing just below Monday's red bar high. So, you know, a little bit better of a bounce. Apple, we just mentioned, is getting a nice bid. Amazon's up a little bit on the day, but still kind of a soft name. Microsoft hanging in there okay. I like Google. I was hoping for Google to get down to this gap here. Never quite got there. That's getting a little bit of a micro bid. But again, I'm a little bit more in kind of a neutral-ish stance right now. Immediate near term, meaning like for tomorrow, I'd say we probably, I wouldn't be surprised if we test a little bit more downside just based off of this weakness here in the last, 10 minutes or so. And doesn't look like we're going to get above that 50 moving average here by the close there on the SPX. It's 38.77. and we're at 38.74 right now. So we got 30 seconds left, by the way. So that does leave the door open for a little bit more downside. That doesn't mean they can't buy the dip tomorrow and push us up above it Thursday, and then we rally into Friday. It's certainly possible. But right now, I just, I would have liked to seen a better rally. I would have, like I said, I would have felt a lot better if we gapped down and then V-shaped. But right now we had a gap up. We had a nice surge, and now we're just consolidating. It's not like there's no conviction here. And again, the transport's a little bit weak. I don't like that the Russell lost that bullish structure. There's just it's kind of a mixed tape, really. And there's the closing bell. So let's take a look at the SPX. Oh, wow, they popped it up. Nice. Okay. So they just squeezed. I told you they don't make it easy. So they squeezed it in there by literally less than 1 point, or 1 point exactly on the SPX. Look at that. So, I mean, you can't make this up here. So anyways, okay, big deal. They saved it at the 50 moving average, but it's still a little bit of weakness, right? Like I would have preferred us to have a nice up day, a pullback, and then a thrust higher, close above 387, 388. So really kind of slam the door. They shouldn't have had to sneak that in the last second there. Either way, yeah, maybe we still have a little bit more downside tomorrow, maybe a small gap down. Big picture, though, meaning like the next 2 weeks by end of year, I think we still get a relief rally. Again, I do have kind of a cycle date for today. We may have put in that pivot low yesterday. We'll give the market a little bit more of an upside bias since they just snuck that 50 moving average close in there. But into the end of the year, kind of like what I said yesterday, I'm looking for a little bit more of a bounce. I think a lot of people are here. So that does concern me a little bit. But overall, we're coming into the end of the year. It's kind of a tough time period. Liquidity is a little bit on the lower side. Take a look at the spiders. Volume's pretty light. There's end of year window dressing, window undressing, jockeying for position, tax loss selling, that type of thing. So it's a little bit trickier, but we'll give the market a neutral to upside bias here. They did save that 50 moving average by the end of the day. Not so much on the spiders, obviously, but at least on the SPX. All right, Russell 2000. So we got back above 175. So that's a good win there for the IWM. It also closed above Monday's high. So that's a positive there for the market. Russell can be a leading indicator. Remember, it is a risk index. So small caps do tend to lead the market here. Again, your upside is basically the same as everything else. That 178 area, which was the pivots prior to the CPI number last week. So we'll watch that there. And on the triple Qs, it is that 280 level. I think there's pretty good resistance here in the near term. Diamond here also up on the day, gapped above that purple trend line I've had on here for quite a while, which has been a nice pivot going back to 2021. So a gap above that. And again, resistance is still the same there, right around that 336.50 area, red bar high. And then if you get through that, you have the gap fill. So Dow, nice update there. All right, over to the semis. Here's another positive here for the bulls. So semis up 2.25, and the semis actually, it had has kind of a similar pattern here to the spiders and the Qs, but this really held that bullish structure all day. You kind of see this the spiders kind of dipped down and they really threatened this kind of intraday low. The semis never really did that. So you guys know I like to see the semis leading. Semis still above the 50 moving average, never even challenged it, and now back above the 100. So I think SMH can possibly get up to 220. So there's a gap window right there. And then your official gap fill is 223.77, 200 moving average in that area. So that would be kind of a good area of resistance right there. You have the 20 there as well. So semis still showing a little bit of leadership and outperforming. IGV also having a decent day as well, up 1.16%. It did back off of the 50 moving average there, but I think this bullish pattern is not terrible here on the intraday. And you can see the spiders as well. So there's the IGV, but on the hourly, this is not a bad pattern for a move up tomorrow. So, we'll give the market a benefit of the doubt for now. I think it's holding up okay. I just would have rather seen, like I said, a gap down yesterday with kind of a flush, or at least a more decisive close on the spiders particularly. But anyways, transports we mentioned already. We broke that yellow channel. We confirmed below the 50 moving average yesterday. So that is a point of concern for the DJT. That means we have some resistance here at 13.7 on a back test. So if it can get through that, it can go back up to 14,000. But for right now, not a good look here on the transports. That will come into play probably next year. Market may be able to hold up a little bit until then. But again, like we said before, the transports are a leading indicator, and we got to be aware of what they're doing at all times. Anyways, 10-year here. exactly flat to the penny on the TNX. Still holding up here. It does have kind of a bullish pattern here, again, kind of on the hourly. So we have an up move, and we're kind of just going sideways there. It could still push up. The 30-year, I still have a buy signal here if 30-year did finish green. Maybe it wants to come up here and fill this gap around 38.22 there on the TYX. So it's holding up okay. If we look at TLT, we never officially filled this gap. I mean, it got very close. We got down to 102.96, and then the actual gap fills 102.73. So maybe even a little bit of a bid lower, maybe down to 101.50 of the 50 moving average down there. I could see that setting up. If we look at the long bond, which is what I tend to go off of a little bit more on ZB, you can see you have a 4-hour bear flag here. And it's a pretty good one too, because we went up and basically tested that 20 moving average, and we got rejected there. And then on the hourly, same kind of thing. So inside bar, tried to get above the 50, got rejected. So I think there's a little bit more downside in the long bond here, but maybe not a ton. It's not crazy. There's a lot of good support right in this area going back to the middle to, well, really the end of November here in the beginning of December. Anyways, home builders, XHB, nice bounce there, up 1.87%. You guys know how I feel about that. Same thing with ITB, up exactly the same here. ITB in a little bit better shape, though, as it reclaimed that 20 moving average. So that is outperforming right now. And VNQ, again, so we got above this. So it was a failed pattern, right? With the other day, we closed below that. But we have an inverse. This was resistance. We gapped up. It became support. We broke through it. Now it's resistance again. As you can see, we have a shooting star candle on the daily. So VNQ in rough shape, I would avoid the real estate, general real estate equities at the moment. If the market gets a bid, nothing to say this can't get a bid here, but it is definitely on the weaker side. XLF, nice little pop in the last 10 minutes. It was down pretty, well, I wouldn't say down, but it was a little bit weaker here for most of the day. We had a gap up, went to that 50 moving average. So a little bit of a bounce again, 200 there. Upside targets, gap fill. That's where you broke down from. So that is a logical place to look for on the upside. Let's not make much more out of it than that. XBD, broker dealer, same thing. 50 moving average, 460 level. That has not changed. Crude. So nice up move for crude here. So up to 2.89 currently. So continuing to get some gains here. So I said yesterday, if we can break above this 20, we could get up to that 80 handle, maybe the 50 moving average. And that's the next logical area, assuming this holds and we don't get a reversal or something like that. I only say that because I could just see that happening. The crude's been that way lately. But a nice bid there. I wouldn't do anything with it right now. If it gives us a bullish pattern, maybe it wants to go higher, we could play that. But I'd rather get another dip here, and I think there still is one. Again, like I said yesterday, I did not see any sort of real capitulation here on the weekly or daily. And I think there's still potentially some downside for crude. I just still think this move here, this up move, is still just backing and filling. But for right now, crude having a nice day and really one of the better performing assets today. So decent move there. XLE up 1.9%. Again, this could still at this point. So let's take a look. So we have a down move, and now we're kind of just chopping, right? We're chopping above this 82.50 area, which we knew was support. Weekly, you can see it a lot better, right? That's a bearish inside bar. So if we continue to chop here a little bit longer, this could be setting up for a move, maybe back down to that trend line there, which is right around 75. But for right now, it's holding up and it's still outperforming, so we'll respect it. For the meantime, XOP, same kind of look there, down move, kind of choppiness there. I think this wants to go down to 120 to 125. OIH, you guys know the deal. 250 to 260 is the only thing I'm interested in on OIH currently. Nat gas, a little bit of a stall out here. It did make a lower low yesterday, though. Could this be a buy at $5? It could be, but I want to see it go straight there, preferably by tomorrow or the end of the week. I don't want to see it start to chop sideways. If it does that, then I would honestly just avoid it because it could go lower here. But nat gas managing to scratch out a small gain today. We'll just leave it at that. Dollar index up 23 basis points. Nothing crazy here. This could be setting up more choppiness to make a run at 102. If it does that, I think that's a buy, at least currently. And that may coincide with, I would say, probably about 1875 gold. I'm not sure if I told you guys that, if it was in the forum with the members, but 1875 is pretty good resistance on gold currently. It can get up there. I do not think it gets through that currently, but it's holding up okay. And as long as the dollar remains weak, the gold will continue to bid. If the dollar gets down to 102 and gold gets to 1875 at the same time, I think that would probably be kind of like a multi-buy / sell signal for the two of them. Silver here continuing to hold up. It's very overbought. Needs to pull back. It's extended, stretch, whatever you want to call it. Don't chase it up here. You'll get a chance to buy it soon. It's into resistance now. This is where all the bulls are trapped. They're going to become sellers shortly. But hey, what can you say? Silver's having a nice little run here. And we will play this again shortly, but it does need to come back in. Platinum, a little bit of a retrace day. I wouldn't make too much out of it. Basically retraced 50% of yesterday's move. It's still holding up okay. If this puts in a bullish pattern, this can move higher. But I wouldn't really add anything to platinum right now. And then copper, also kind of just more choppiness here. Let's not make too much out of that either. And then Bitcoin, again, just Bitcoin just doesn't give me much to talk about here these days. But ever since we went up into that 50 moving average, it's just been kind of a continuation down. We still have that weekly inside bar, so just be careful with it here. I do not like this setup here on Bitcoin. And the longer this consolidates, the farther down this can go. I mean, it might actually test 10,000 instead of 11 to 12 if we consolidate for longer. So just be aware of that. Anyways, back to the spiders, or the SPX rather. Okay, we got to close above the 50 moving average. It's a psychological win for the bulls. I wish they didn't have to sneak it in on literally the last tick of the day. But again, we'll give the market a neutral to upside bias going into year end. Volume is going to be light. There's going to be some tax loss selling. There will be some January effect too, if you want to get in on that. We're already starting to pick up a few names for that. And I think they're going to play out pretty well here, as there's a lot of names that have been absolutely roasted this year that should be really good January effect plays. But either way, spiders, neutral to upside bias here going to the end of the week. We got the 50 moving average, so golf clap for the SPX. Anyways, guys, I'm going to wrap it up here. Come find me at carnivoretrades.com. Talk to you guys all tomorrow.